Johnson & Johnson agreed to supply up to 400 million vaccines to African Union. And Kenyan bourse hikes dividend after net profit doubles to 168 million shillings. And huge ship blocking Suez Canal partially refloated. This week's show with intraday market numbers from Africa, which were mostly positive. South Africa's JSE posted the strongest gain of 0.59%, while Nigeria's main index was up 0.09%. In Egypt, the EGX 30 declined 0.83%, and Kenya closed negative on Friday. And looking at Asian markets, stocks in Asia Pacific were mixed today as markets in India were closed for a holiday. The Nikkei 225 in Japan gained 0.71% to close at 29,384 index points, while the Topix index advanced 0.46% to finish its trading day at 1,993. South Korea's Kospi closed 0.16% lower at 3,036 index points, while Hong Kong's Hang Seng Index closed little changed at 28,338. Mainland Chinese stocks were higher on the day as the Shanghai Composite gained 0.5% to 3,435, while the Shenzhen component was marginally higher at 13,771 index points. In Australia, the S&P ASX 200 declined 0.36% to close at 6,799 index points. MSCI's broadest index of Asia-Pacific shares outside Japan traded 0.06% higher. And stock futures traded lower today after a rush of broad-based late buying pushed the S&P 500 to a record high in the final minutes of Friday's session. Futures on the Dow Jones Industrial Average implied an opening loss of about 130 points. S&P 500 futures and Nasdaq 100 futures also traded in negative territory. On Friday, all three major benchmarks rallied to their session highs in the close, with the blue-chip Dow closing about 450 points higher. The S&P 500 eventually climbed 1.7% to hit a record closing high, while the Nasdaq Composite wiped out a 0.8% loss and ended Friday 1.2% higher. Traders are bracing for heightened volatility during this holiday-shortened week, with quarter-end rebalancing among pension funds and other big investors. And in the UK, the number of people visiting the shops has continued to rise as government eases COVID-19 lockdown. Let's do an intraday call to London now. Hello, Juliana. Great to have you. It's a happy Monday in the UK as government is allowing up to 6 people meet outdoors from today. Are the markets also happy at this time?
Well, I'm happy, Laddie, and you're happy, but no, the markets are unhappy. It's pretty volatile, and this is surprising considering the Evergreen has finally been shifted from the shoreline of the Suez Canal. It's actually the big oil majors that are dragging down the blue chips today. The FTSE 250, the more domestically focused market, did start off on a high, but it's in the doldrums at intraday. And this is, as despite, as you said, Britain has finally gone into the third phase of the easing out of lockdown. So from today, you can meet up with up to 6 people outside, and another family can meet with another family outside. This is massive for the hospitality market, even though non-essential retail is still closed. What's expected is that if obviously you're going outside for a picnic, you're going to spend more money in local cafes. So this is a great day, and we're hoping, fingers crossed, that April 12th is all going to plan, because we know there's been a slight delay with the vaccine rollout for the under 50s. But let's have a look at the numbers then. The all share is down 0.05%. The FTSE 100 down by 0.08%. And the FTSE 250 at intraday is down by 0.08%. In the currencies market, the British pound is up against the US dollar by 0.25%, up against the euro by 0.46%, and up against the Japanese yen by 0.13%.
All right, really good news indeed. Well, Deliveroo has said it will price shares for its stock market listing on Wednesday towards the bottom of its price range due to volatile market conditions. Are they bowing to pressure here?
Well, if Deliveroo were to bow to pressure, what they would be doing is shifting their self-employed drivers to full-time workers, and that doesn't look like it's going to happen anytime soon unless there's a Supreme Court hearing. But, you know, there's certainly a little bit of frustration, I suspect, from their bosses. It's still billed to be the biggest IPO for 10 years in London, a massive, massive win for the square mile that has been losing out to Amsterdam and Paris and the likes of the big tech listings that we've been seeing in New York. But Deliveroo is certainly under pressure. Last week, 6 of the biggest investors in Britain decided to pull, and this is because of their corporate social responsibility. There's a lot of anxiety about whether or not Deliveroo's market is sustainable, especially after that Uber win for the drivers a couple of weeks ago, which turned 70,000 drivers up and down this country into workers. Is this going to happen to Deliveroo? They've won a couple of court cases here in the UK, but they've still set aside, from the looks of their IPO prospectus, over 100 million euros to battle with court judges in the European continent. And that's because there are a lot of people that just don't think they're treating their staff right. Over the past couple of years, Deliveroo have completely refuted this. So they say that their workers are happy because they can switch on and switch off when they want. But we know during the lockdown, their work has increased. But it is still going to be a big listing. So no is the answer, Laddie. They aren't bowing to pressure, but it has taken off £1 billion of their market capitalisation.
All right, we'll keep watching that because it seems like something just comes up every now and then for Deliveroo. But anyway, a British online car retailer, Cazoo, will make its stock market debut in New York through a special purpose acquisition company after agreeing to a merger deal that values the company at $7 billion. How are analysts reading this?
Well, we have to wait and see. I think the New York Stock Exchange is about to open any time now. It'll be interesting to see what their share price is at close of business. But, you know, look, this is great for Cazoo. They're kind of known as the Amazon for second-hand cars. They've been doing exceptionally well over the past couple of years. I believe they've got about 1,600 staff that work across the UK and the rest of Europe. Unfortunately, for the square mile, it's a big loss to them. They would have, of course, loved a British second car a dealer to be listing on the London Stock Exchange, and I believe they did bid for it, but Britain and London are still very slow in catching up to this new SPACs listing option, which means there's basically a blank check and it's much easier to float on a stock exchange. London will be adopting it, but not yet. So Cazoo have gone with New York, as you said. From what I read, it's actually going to be listing at about $8 billion, but who knows? There's so much volatility in the markets at the moment, but this is a great day for Cazoo, just a loss for London.
Yeah, true. A lot of volatility there. Anyway, Juliana, thank you for the update. Always great to talk to you.
And you, thank you.
All right, investor sentiments in major markets we track in the Middle East were all in the positive territory at intraday. In the UAE, Dubai's main index jumped 2.10%, while the Abu Dhabi index advanced 1.17%. Elsewhere in the region, the Qatari index was higher by 1.30%, while Saudi Arabia's market rose 0.56%. And oil prices were slightly lower in early trade today as efforts continue to dig out the giant container that's the stuck in the Suez Canal, and little new emerged in the demand picture. Brent oil was down 0.3% at $64.39 a barrel, while U.S. crude fell 0.4% to $60.75 a barrel. Both benchmarks are roughly where they were before the Ever Given became a household name that the container ship got stuck in a narrow portion of the canal last week. And gold prices fell on Monday as the U.S. dollar firmed against a basket of rival currencies with rising appetite for riskier assets on the back of economic recovery and higher vaccination rates denting the metal safe haven status. Spot gold fell 0.2% to $1,727 per ounce, while U.S. gold futures declined 0.4% to $1,726 per ounce. The dollar began the week firmly as U.S. economic strength, vaccine rollout proceeding much more quickly than in Europe, drew investors into the greenback. Among other precious metals, silver fell 0.8% to $24.84, and palladium rose 0.1% to $2,677, and platinum fell 0.6% to $1,177. And in Europe, markets were mostly higher this morning, and Conrad is standing by at the Frankfurt Stock Exchange to give us more updates from the European scene. Hello, Conrad. Good to have you.
Good to be back on Channels TV. Hi.
So great to have you. So the Ever-Given, the container ship that got stuck in the Suez Canal, has been freed, and the oil price slumped 2% on the news. How has the equity market in Frankfurt opened the week?
Well, you know, immediately after trading started here in Frankfurt this morning, the German share index DAX jumped to a new record high. I would say we could call this a big sigh of relief. Of course, if we take only the container ship traffic from China to Europe, 98% of this is going via the Suez Canal. And you know, how much of a damage has been made due to the event is unclear. Okay, I'm talking into the other camera now, as I thought I've been getting a signal, Ladi. So, taking a detour around Africa, of course,
would have made the trip 13,000 kilometers longer, or 10 days longer. So, the German insurance group company Allianz says that all this might have cost up to 9 billion euros, and that it's very difficult to really give a clear price tag for how large the insurance claims will be that the owners of this company are now facing.
All right, so two large investment banks, Credit Suisse from Switzerland and Nomura from Japan, have come out with profit warnings. Credit Suisse even talking about significant losses. What's actually going on there? No. Okay, I said the two large investment banks, Credit Suisse from Switzerland and Nomura from Japan, have come out with their profit warnings. Credit Suisse even talking about significant losses. So I'm trying to understand what's actually going on there. I don't know if you can hear me, Conrad.
But I can hear you, yes.
Okay. Did you get my question? Okay, so I said two large investment banks, Credit Suisse from Switzerland and Nomura from Japan, have actually come out with profit warnings. Credit Suisse even talking about having significant losses. So I want to know what's happening in that area.
Yes, Credit Suisse and Nomura both have a client in the United States, an important client for them, a hedge fund called Archegos Capital Management. And according to several sources now, this fund, Archegos, failed to meet its obligations towards those two banks, Credit Suisse and Nomura. Obligations which have to do with margin calls, which is, you know, heavily leveraged investment on the markets with a lot of borrowed money. Now, as Archegos failed to meet its obligations, it had to sell a large amount of shares it owned. The reports differ a little bit, but they talk about an amount of between 20 and 30 billion US dollars worth in shares that Archegos had to sell. That sent a shockwave through the markets. It made everyone very nervous, also about other hedge funds potentially Credit Suisse does not say exactly how much the loss will be, but its shares slumped 13% today. Nomura says it's facing $2 billion US dollars worth in losses, and the share price of Nomura in Tokyo trading today was down 16%.
All right, Conrad, we'll keep tracking that. Thank you so much for your time. Always great to talk to you. Interest rates are at record lows in many markets in Sub-Saharan Africa because the central banks have tried to support economies during the pandemic. But will these rates remain low, and what will it mean for the economic recovery and business activity? Matt Kindiger, an associate practice lead for SSA at Africa at Frontier View, joins us now to tell us more. Hello, Matt. Great to have you.
Hi. Thanks for having me on the show today.
Yeah. So interest rates in many markets are either at multi-year or historic lows across Sub-Saharan Africa. Are central banks expected to raise interest rates over the coming years?
Yes. So very broadly, we do expect central banks across Sub-Saharan Africa to raise interest rates. And this is partly because interest rates are so low, as you've just said. We are also seeing demand gather pace across Sub-Saharan African markets. So central banks have a bit more scope to raise interest rates, especially if inflation begins to increase. We are also seeing some downward pressure on currencies in certain markets. So despite the economic recoveries, we are seeing currencies face continued downward pressure. So central banks will look to raise interest rates slightly to support these currencies. So there are certain countries that I would say you should watch out for in terms of interest rate hikes over the coming months. That includes Kenya. So we are seeing some higher inflation coming out of Kenya. Nigeria, partly because of downward pressure on the naira and also higher inflationary pressure in Nigeria as well. And also Ethiopia, really seeing quite significant downward pressure on the birr currency there. So certainly we are expecting some interest rate hikes going forwards.
Okay, we'll keep tracking that. Well, are there any markets where interest rates will remain low or could actually fall?
Yeah, so even though there is a general trend of higher interest rates expected across Sub-Saharan Africa this year, there certainly are markets where we are expecting some sort of looser monetary policy, and that includes South Africa. So the South African Reserve Bank has kept interest rates at record lows. The very weak nature of the economic recovery in South Africa and fairly muted inflation expectations this year means that we are not expecting significant interest rate hikes, potentially in Q4 this year, but we don't really expect to see interest rates rise significantly. And in Ghana as well, we are potentially going to see lower interest rates, some looser monetary policy. And that's partly because inflation expectations are quite muted in Ghana as well. We are expecting inflation to fall within the Bank of Ghana's inflation target of up to 10%. And there's also been quite significant stability of the CD over the last couple of months. So the Bank of Ghana has some scope to lower interest rates a little bit. Angola is another country. Interest rates are quite high there. It really depends on what happens with inflation. If inflation continues to fall, then we could see 1 or 2 interest rate cuts at the end of the year.
All right. How have low interest rates affected credit growth in Sub-Saharan Africa over the last year? And will this change once interest rates rise?
Yeah, so the sort of significant reduction in interest rates across the region last year had a very mixed impact on credit growth. So in a country like Kenya, credit growth was very healthy across 2020, and we've seen it continue to grow at the beginning of 2021, partly because of banking sector reforms. And this has also happened in Ghana as well. We have seen some pretty good credit growth as a result of lower interest rates. In South Africa, not so much the case. So we actually saw credit growth fall back during 2020 after interest rates were cut, but it has picked up subsequently. Looking ahead, we don't see a significant reduction to credit growth going forwards. And this is because the scale of the increase of interest rates is probably going to be quite slow for most markets where interest rates do rise. But generally, we do expect credit growth to continue to grow fairly healthily across Sub-Saharan Africa, and this will support economic activity and business demand going forwards.
All right, Matt, thank you so much. Always great to have you on the show. Matt Kennigan, Associate Practice Lead, SSA Frontier View. Thank you so much for your time.
Thanks very much.
And Johnson & Johnson has agreed to supply as many as 400 million COVID-19 vaccines to the African Union through the end of next year, delivering a boost to the African continent. According to the U.S. drug maker, it can make available as many as 220 million doses of its single-shot candidate to the AU's 55 member states starting in the third quarter of 2021, while a further 180 million will be delivered the next year. The pact follows agreements with AstraZeneca plc, Pfizer Inc., and the makers of Russia's Sputnik V vaccine, while the J&J vaccine has started to receive approval in some countries around the world. The delivery commitment to the AU will depend on regulatory backing from member nations. The doses requirement for just a single shot is seen as beneficial for Africa, where distribution is likely to present a major challenge. And the Nairobi Securities Exchange has reported a 109% increase in net profit for the year that ended in December 2020 at 168 million shillings, while its profit after tax increased to 167.9 million shillings in 2020 from 80.2 million shillings in 2019. In 2020, the company embarked on a cost optimization exercise that led to a 83 million shillings reduction in staff-related expenses, a 14 million shillings decline in product development expenses, and an overall 25% drop in administrative expenses. NSE's operating expenses fell to 467 million shillings in 2020 from 625 million shillings in 2019. The firm's revenue, which consists of transaction levy, initial listing fees, additional listing fees, and market access fees, broker subscription fees, and data vending income, suffered due to a 3% drop in equity turnover. And the Suez Canal Authority says massive container ship blocking Egypt's Suez Canal for nearly a week has been partially refloated, raising hopes the busy waterway will soon be reopened for a huge backlog of ships. After further dredging and excavation of the weekend, rescue workers from the SCA and a team from Dutch firm Smith Salvage worked to free the ship using tugboats in the early hours of today. The Suez Canal Authority say Ever Given has been straightened in the canal, and further tugging operations would resume once the tide rises later today. The 400-meter-long Ever Given became jammed diagonally across the southern section of the canal in high winds early last Tuesday, halting shipping traffic on the shortest shipping route between Europe and Asia. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. From me and the team, it's bye for now.